Good afternoon, folks. This is your ticker guy, Carl, coming at you from Niceville, Florida. Listen, I want to talk to you about Paulson's bazooka. He pulled it and fired it, and there was a mighty blast. It got blown up. Preferred stockholders, for one. The GSE debt has been officially backstopped by the United States federal government. Do not believe for a moment that it didn't happen. It most certainly did happen. The senior debt, both subordinated and unsubordinated, was officially guaranteed today. But in fact, all the mortgage-backed securities were guaranteed too. Why? Because all of those are guaranteed by the solvency of the firm. And what Hank Paulson said is that he is going to throw $20 billion a month into these firms in order to maintain their solvency. Now, how did all this happen? Well, apparently Morgan Stanley went in there and found out that the marks that had been put on these securities were not real. So they adjusted them, and when they did, they found that, in fact, these permanent impairments that the GSEs were claiming were temporary meant that they were bankrupt, and that gave them the authority to come in and do what they did. All right. Where does it end, folks? Well, I'll tell you what. This is a major problem, because by wiping the dividend on the preferred, as well as the common, what's happening now is that every financial in the world that is under U.S. governance, which means all the U.S. investment banks, all the big commercial banks, Bank of America, Citibank, Merrill Lynch, Wachovia, WAMU, Morgan Stanley, Goldman Sachs, Lehman Brothers, all of whom have gone out and issued all kinds of convertible preferred or non-convertible preferred or non-cumulative or cumulative, whatever the case may be. They've all been out there issuing preferred stock in order to shore up their balance sheets. Folks, none of that is safe anymore. Furthermore, neither is the GSE debt, the MBSs. Because here's the problem. In January of 2009, you're going to get a new administration, and Henry Paulson's guarantee is not in writing and can be revoked by that new administration. It can decide that they're not going to put any more money into these institutions and are going to put them in receivership. So if you own the GSE debt, the MBSs, or the senior debt, this is your opportunity to unload it into the spike in price that is absolutely going to happen tomorrow. If you own the common or preferred, you're going to take it in both holes. I wouldn't be surprised to see both of them open at $1 in the morning. The bigger problem is, what's Lehman's price going to be? What's Citibank's stock price going to be? What's Morgan's, Merrill's stock price going to be? Why would anybody buy financials, given that the Treasury Secretary 2 months ago told you to go out and buy preferred stock in Fannie Mae and Freddie Mac, and now has declared them both worthless, literally by fiat, because their accounting is screwed? Well, you know what? How about the level 3 accounting for all these other banks? That's a little bit of a problem, isn't it? I think so. Let's get to the next thing. Sheila Bair got out and said all of the FDIC-governed banks need to mark their portfolios to the market with regards to their exposure to this preferred stock. This is a major problem because it is probably going to force a significant number of these banks into immediate insolvency. Then the FDIC is going to come out and start taking them over. Well, that would be great, except that historically when the FDIC has seized a bank and closed it, they haven't taken much of a loss. But over the last couple of months, the banks that they've been seizing have had estimated losses of anywhere between 20 and 50% of the assets. Folks, the FDIC is going to run out of money. It's not going to be good. That's going to come back on you too. So let's talk about the impact on treasuries. Let's talk about the impact on currencies. Let's talk about the impact on equities. On equities, if you buy or own any financial security that is exposed to either Fannie and Freddie's preferred stock or their own preferred stock, and needs to be able to access the capital markets in order to raise money, if you own that beyond 9:32 tomorrow morning, you're an idiot. Henry Paulson has just demonstrated that he will do whatever the hell he wants to your interests, even if he told you 2 months ago that these were perfectly good, safe, sound, and were going to be maintained as shareholder-owned and controlled corporations, and you were going to be all right. He could do it to you too. the risk premium just went way up, and all of a sudden that 10% coupon doesn't sound so good, does it? If you own GSE debt, I'm sure the spreads will come in mightily. I'm sure that the values will go up on Monday morning. And again, if you don't sell it at the first opportunity, you're an idiot. Both John McCain and Barack Obama have told you in clear language that they don't like this. They don't like bailouts, and they don't like the GSEs being out there with implicit or explicit, as it stands now, taxpayer backstops. And in January of 2009, one of the two of them is going to get the opportunity to skull screw you in both eye sockets. So, if I was in your position, I would use this opportunity to get out of that debt. Now, the new stuff, hey, the new stuff's golden. But the new stuff the Treasury's going to buy, isn't that so nice? You're not going to have the opportunity to buy it because Treasury's going to pick it up. That's great. Treasuries. Let's talk about Treasuries. Treasury bond yields are likely to go quite a bit higher. Yeah, spreads are going to come in, but not because of what you think. My guess is you're not going to see a lot of movement in the coupon on agency GSE debt. What you are going to see is you're going to see every piece of the yield curve in Treasuries go higher. If you hold Treasuries and you are looking at them from a capital perspective, you're going to get hurt pretty badly on Monday. And my expectation is you're going to see the first parts of that overnight. This is not a good thing at all. In fact, it's very bad because if we ramp the cost of government funding, this is the nightmare scenario that I've been talking about. And oh, by the way, as the Treasury yield goes up, so does everything else. Credit card loans, auto loans, commercial industrial loans, this is the way that you take a liquidity crunch and you turn it into an all-on deflationary credit collapse because nobody can afford to borrow anymore, not to mention the credit standards tighten up. Speaking of credit standards tightening up, what do you think happens to all those regional and local banks? If they don't get driven out of business, what kind of withdrawal of liquidity does this bring to their balance sheet and contraction of their lending capacity? Tremendous. In summary, what Hank Paulson did isn't quite the worst thing that could have possibly happened, but it was damn close. You sat and watched American Idol for the last several months, and now you're going to get charged for it. Congratulations. Watch the dollar go in the tank. It already is. I'm watching the FX crosses as I make this video, and they are not pretty at all. Watch the futures. Don't be shocked if they go rocketing higher. Oh, by the way, oil, likely to go quite a bit higher too. The dollar goes down, oil goes up, right? That's a little bit of a problem. We have this thing called a hurricane. It's Ike, and it's coming our way. Put all of this together, my assessment of it is this. It is 1929. For real. Next month is October. Think about that. Have a good evening.